U.S. security markets for the trading of equities. The two main U.S. markets for trading equities are the New York Stock Exchange and the NASDAQ. The New York Stock Exchange is the oldest U.S. exchange still in operation. The New York Stock Exchange is the largest equities-based exchange in the world. It's an auction market that uses specialists called designated market makers. The New York Stock Exchange is known for its blue-chip stocks. NASDAQ. Founded in 1971 as the world's first electronic stock market, the NASDAQ is a global electronic marketplace. It's a dealer market with many market makers competing with each other. The NASDAQ is home to many technology and growth companies, including Apple and Google. Exchanges set rules and regulations for trading activities. Companies listed on exchanges must meet minimum requirements and baseline rules concerning their boards. Other stock market indexes include the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite Index. Listed securities are financial instruments that are traded on an exchange, such as the New York Stock Exchange or NASDAQ. Listed securities can be stocks, bonds, or derivatives. Here's some other things to know about listed securities. An IPO. When a company issued stock, it launches its listings through an initial public offering. Listing requirements. Private companies that go public must choose an exchange and meet the listing requirements. Delisting. A company may be delisted if it fails to meet the exchange requirements or if it is being bought out by another company or by private investors. Over-the-counter markets or OTCs. Shares are traded directly between dealers and investors in OTC markets, which are often used for smaller or lesser-known companies. Listed shares. Listed shares offer high liquidity transparency and regulatory oversight. Unlisted shares are not available for trading on public exchanges, resulting in lower liquidity. Stocks are categorized based on market capitalization, industry, and whether they present growth or value investing opportunities. Listing securities could also be considered the securities of companies meeting specified requirements of exchanges and marketplaces. A broker is a middleman between an investor and a securities exchange. A broker is needed to trade for an investor because securities exchanges only allow orders from members. Brokers are paid through commissions, fees, or by the exchange itself. Another way of stating that is to say a broker is an intermediary who represents buyers and sellers in security transactions and receives a commission.